Just how relevant are higher interest rates to this equity market at the moment, given how much we've repriced and how little equities have moved back?
I think interest rates are going to be really important here, especially for the small cap space. We recently upgraded. I think as long as interest rates stay reasonable, there's a lot of reasons small caps can shine. Valuation, historically cheap relative to their large peers, big picture themes like reshoring, like infrastructure development, all would benefit small caps, but interest rates need to stay at a reasonable level, and that could lead to an extended period of small cap outperformance.
Define reasonable.
You know, our view is that interest rates likely move sideways from here. Obviously, the market's holding its breath a little bit ahead of the Fed tomorrow. I keep talking to clients about what matters to the market and what is just noise. And clearly, one of the two things I think that matters is the Fed. The other, of course, is earnings.
Well, okay, so just sticking with the Fed for a second, because at some point, Jay will be getting out of bed. You probably already have had out of bed, I will say, getting prepared for it. Well, I think that probably most people, especially, do you think he gets nervous?
6:50 in New York, I think is like 4 a.m. in Washington, D.C.
It's the same time zone. You know this.
2-3 hours behind us.
All right, moving on. There is this question about what he would say that could potentially make you reassess your thesis in small caps at a time but it just hasn't gotten off the mat. Everyone's been wanting small caps to rally, and it just hasn't been outperforming.
So when I think about what really matters from the Fed, it's going to be how clear is Powell's communication tomorrow? How transparent is he about policy? Clearly, we're going to hear a Fed that is likely on hold. It's going to be talking about a balance of risk, the risk of cutting too soon versus holding policy too tight for too long. I think he's going to try to take this really balanced view is my expectation, but transparency and why, the rationale for why they cut rates when they ultimately do. Are they recalibrating policy? Is it an adjustment? Or are they cutting rates because an economy is slowing? That's not our view. So I think the messaging is almost more important than whether it's June or July or, you know, what the exact timing is.
Well, at the moment, they appear to be pushing back the timing, or at least the market is, because growth is decent. We heard from Neil Dutter of Renmac yesterday. He wrote in nominal GDP. It's pretty solid, which is a reason to like equities, not dislike them. You like the US over international. Why retain that home bias to America right now? Is it the rest of the world just not doing that well?
Well, if you look outside of the U.S., you know, here in the U.S., I think we see so much resiliency in earnings. We're starting to see this rotation under the index level. And I think that's really driven by earnings picking up in other sectors like discretionary, financials, industrials. And I think that's really important here to the U.S. story. But if you look outside of the U.S., you know, you have parts of Europe flirting with recession. You have China has been cautious in terms of their easing and stimulating the economy. I think there's just a more exciting story of resiliency and earnings growth. I think the earnings path may be slow in the U.S., but I think the trend is improving.
Let's go through the sector preferences. Energy, healthcare, discretionary, industrials. Can we start with energy and discretionary? How do those two things work with one another? We've got energy breaking out recently, Brent crude getting back close to $90 a barrel, energy equities picking up off the back of that. How do you reconcile the view on energy with the view on discretionary?
Yeah, absolutely. We've been adding cyclicality to our portfolio. So on one hand, we like energy. Energy's perked up a little with WTI over 80, right? But that's still a pretty reasonable level for oil prices. But it was good to see this sector respond. I like energy for a couple of reasons. One, it's inexpensive value-wise in terms of free cash flow and in terms of earnings. I also think it provides you a little bit of a way to position for a world where energy security is an issue, right? Red hot geopolitical world. We just heard from Liz on the consumer. We have a consumer that is largely stable. Our internal data shows the consumer is very much on 2 feet. Now, we're seeing normalization in spending patterns, of course, still from the COVID era, but I think you have a strong labor market, and as strong as the labor market stays, the consumer will go with it, and I think that leads an opportunity for discretion.